Amadeus Fire is one of Germany's leading providers of professional staffing and training services, connecting talent with business expertise. Today, Joerg Peters, Head of Investor Relations, presents the latest 9-month 2025 financial results, highlighting performance, key growth drivers, and the outlook for the Amadeus Fire Group. Joerg, the stage is yours.
Thank you for the introduction, Sanjay. My name is Joerg Peters, Head of Investor Relations at the Amadeus Fire Group. I would like to give you the highlights at a glance after our 9 months development 2025. The business performance of the Amadeus Fire Group developed in line with our management expectations in both the personal services segment as well as in the training segment in the third quarter. The situation is nearly unchanged. We experienced again a decrease in the personal services segment in revenue and earnings, and we are still in a situation where no positive momentum kicked in Q3 2025. In the training segment, we see some slight glimmer of hope and some small signs of stabilization in the B2G market, as well as a positive development in our B2C business, which is mainly driven by our tax school, Dr. Andres. Revenue for the group were down 18%, and therefore we have to continue our consistently implemented measures to increase efficiency and cost discipline in all areas, in the headquarters, in personal services, and in training as well. On top of this, we suffered from a restructuring program we announced in August in one of our training subsidiaries, Concave College. This resulted in restructuring expenses of 5.3 million for the full year 2025 and had a significant one-time impact on our operating profit in the third quarter and in the 9 months figures. Including that restructuring effect, our operating EBITDA was down to 9.7 million after 9 months compared with 46.4 million the year before. Without this effect, we would have been 15 million on operating EBITDA after 9 months 2025. Besides this, we confirmed our outlook for the full year. So the expected revenue will be in the range of 355 to 385 million, with an operating EBITDA at the lower end of the range given at the half-year report already in between 15 to 25 million. Positive effect and positive story within the Q3 with the acquisition of Masterplan.com, an e-learning platform based on a software as a service business model, which is a very nice buy and build case and strategic investment in the digital B2B training market in our segment. But I will return to this a little bit later. Show you some development in the personal services. As you may know, again, the backdrop of declining revenue and the measures to increase efficiency and cost discipline, we have seen a slight improvement in the third quarter in the personal services segment. As you could see in here, the operating EBITDA margin resulted 11%. If we look to the group in total, it's down to 7% due to training and the first half year. But in Q3, we see that there's a slight improvement above the first 2 quarters of the year. So with a reduced number of temporary workers, but as well with an even larger reduced cost base in personal services, we are on the way up to increase margins in this business, climbing up 2026 to former levels, up to 15% operating EBITDA margin or even higher situation. Different picture in the training segment. You see that here that the operating EBITDA was negative due to the 5.3 million restructuring accruals we made for the Concave College. So this is exactly the difference of the minus 2.2 million within the Q3 quarter. If you add the 5.3 million restructuring expense or accruals, you will result with the 3.1 adjusted figure. And for the 9 months in total, we see the same effect. It's negative for the first time with 1.5 million after 9 months. Adjusted of the restructuring expenses is a positive result close to 4 million. And as you could see in the details, Tax College, Dr. Andres is very positive, more than 9% increase. GFN has reduced due to lower participants, is on the growth path next year as well. And Concave College with a restructuring, reducing their workforce, reducing the number of sites or places where training measures can be taken, will bring them down to a much lower cost base so that they are, with the lean organization for the next year, able to return to profitable figures as well. May we have a final focus on the acquisition we made. The midterm strategic orientation of the group is to expand into new target group. We have thematic expansions beyond IT and commercial training topics. We do this on an organic base, but also with an inorganic growth, mergers and acquisitions. Master Plan was the first acquisition we announced some weeks ago. There are more to come. And finally, all this is based on AI, first in our training segment. Finally, this will result in forming partnerships and being on a journey into a digital ecosystem where the people and the skills of the people are in the center of the further growth in this area. To give you an update on how Master Plan fits into our portfolio, you see that we have a part of the white dots on our landmark filled with Master Plan, especially in the B2B segment and the B2B business, where we have huge potential to increase our business model. And the first trainings of our salespeople, part of the personal services, selling Master Plan products in future as well, have started this week, and very promising situation. So we are looking very positive and very excited to next year to see how this will result in higher earnings and profitable situation for Master Plan itself, but to offer a lot more products to our customers as before. Master Plan itself, just a few facts to them. They have a software as a service platform business. They have revolving license revenue. They have very prominent proof of concept customers already. So we spoke to the Otto Group, we spoke to Volkswagen Group, and they have already their products in place. Currently, they do revenue of around 8 million. This has to increase next year, and they are break even for 2025 and will be profitable in the following years. And the whole management team still on board. They have an earnout component for the following years, and they are highly motivated to use our strategic sales organization to enlarge their product to a lot more customers all over Germany. So it's a typical buy and build case with significant cross-selling potential, and will be the first layer of our platform business model and the ecosystem around people and skills in our B2B business. Therefore, we look positive for the following year. Guidance for 2026 will be given with the results of the full year 2025 in March next year. But there are more things to come. So we are looking forward to the rest of the year. We don't see any positive reaction in the business all over Germany, but based on the homework we did, reducing our costs, being more efficient, there will be some positive development in the Q4 to be expected as well. So we will discuss this with our institutional investors, with our retail investors in the next days and months already. We have May seen on our financial calendar that we have the next event in Hamburg with DSW for retail investors, and we will take part in the German Equity Forum, Deutsches Eigenkapitalforum of Deutsche Börse, end of November, to explain the latest developments in detail. Thank you very much for your attention, and welcome to have some more questions directly to me on our website, respectively, our ir@amadeusfire.com.
Thank you, Joerg, for sharing these valuable insights into Amadeus Fire's performance and outlook. For investors seeking more, visit seat11a.com to explore additional videos, such as the elevator pitch, financial results, and deep dive presentations on specific strategic topics, offering a deeper understanding of the Amadeus Fire Group and its growth story.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.